Welcome back to Real Vision. I'm Ash Bennington. Today, I'm joined by Mish Schneider, Chief Strategist at marketgauge.com and a longtime fan favorite right here at Real Vision. Mish, always a pleasure to have you with us. Welcome back.
Thank you so much, Ash. It's such a pleasure to be back. I have a long history with Real Vision and a real fondness for everybody, starting with the top, Raul, who I haven't talked to in such a long time.
Well, it's always a pleasure to have you here on the show. We've been doing this for many, many years. It's great to have you. Let's walk through what's going on. We talked about a laundry list of things that are happening right now. What's top of mind for you? How would you characterize these markets as you see them right now?
Well, sloppy is how I wake up this morning thinking when I started looking at my Quotron or my Quotron, my God, but my modern Quotron, which would be my trade station radar screen. You know, we're seeing a mixture of negative indices today, but not so far off from where they were over the last week or so. So are we consolidating or are we rolling over? And before we started, Ash, I said, at this point, what I do is I look at the things that I don't want to happen more than the things that I do want to happen before I start making any other investments in the market right now.
So what are those things that you don't want to see happen? What do those indicators look like?
Well, let's start with some of my barometers. I've used really basically in the last couple of weeks, two, because they represent two different things. One, believe it or not, is the ARK ETF, Kathy Wood, because I love to look at her lack of risk management, number one, although she's gotten a little bit better. But number two, in terms of perspective, while we've seen all-time highs in NASDAQ and a lot of the growth stocks, her fund, which invests in a lot of disruptive technology, is still, it's up a lot from its lows, which it made like at around $35. But it's so far from the highs it made in 2021 at 160. And so I felt like this 50-day moving average in the ARK fund, which came in like around 90, was important for it to hold, and it didn't. So that made me feel from the whole disruptive tech space, probably not a great idea to get into all of that right now. Just following her, tracking her, what she has in her fund, right? So that's number one. That's probably why tech is under a lot of pressure. That reflects what's happening there. Of course, AI, we can have that conversation in a little bit, but that there's a big part of that. The other thing, which is kind of opposite of that, is I look at the consumer sector. And people have heard me talk about my economic modern family. And obviously, granny retail is probably my matriarch of the U.S. economy because it reflects what the consumer is doing in both the discretionary and in the stable side. And it's not doing that badly, but it's not doing that great. And that's been under XRT, which is the ETF I use, has been under the 50-day moving average for over a month in terms of trading days. But it held a very key point at the 200-day moving average, which was 78, and bounced. As I'm looking at it right now and talking to you, it's red. It's green. Is it up a lot? No, but it's holding. So what I'm looking for, comparing the two, the ARK versus the consumer sector, is, are we seeing a rotation out of tech that is a bubble? And when I say a bubble, I don't mean AI as a bubble, but a bubble in that it can really bring the market down much further. Or are we seeing that more healthy where it's coming off, maybe finding a better sense of valuation, and yet we're rotating into a broader market, which is, of course, a healthy thing. And I don't think we know the answer to that yet. So those are two of the things I'm watching. I have many more, but that's kind of my broad-based vision right here.
Let's tease that out because that's an interesting idea, the idea of ARK versus the State Street Spider S&P Retail ETF. I know you talked about each of them individually. Tease them out together. I'm curious about what you see in terms of the relative movement of those two, what you would expect to see as part of a historical pattern and where we are now.
Well, from a historical pattern, obviously the AI revolution and the fact that we had this tremendous move up in not only the Mag 7 stocks, but in a lot of the smaller stocks that were being bought up by these big companies. And while consumers were lagging, told me that growth is keeping the market up. and to some degree the economy up, but not to the degree that it needs to be as much as the consumer sector, which of course is 70% of the gross domestic product. So that's why, to me, it kind of was an easy way to see, like I said before, that rotation. Is the consumer tired and this is going to be the nail in the coffin because tech can't hold up? Or is it that tech is tired and the consumer might actually start to benefit a little bit, and we have some real things to look at. Will the Fed lower the interest rates again? Will that help? Will tariffs be ruled as illegal? We don't know. I mean, that's a whole other thing on the table. With the government reopening, is that going to be a help? What about the labor? I mean, we haven't seen any statistics, but do we really need to? So to me, if you watch that consumer market, even though we have some niches in that, which we'll talk about way later, that's where the consumer is going to tell me, don't worry about tech so much. We're still looking pretty sound in the economy, or we're not, and we may be going more towards recession. And anybody who thinks they know the answer to that definitively, I would question, because I don't think it's that clear right now.
Yeah, it's almost a question when you have those two indicators diverging, what leads and what follows.
I like to say we don't want weak links to become anchors. And there's always weak links in the market. Obviously retail is one, and now we're seeing ARC as another, right? Because as I'm talking to you on my screen to my left here, so I'm going to look, it looks like it's trading at like 78 something. It's down, down 3%. I mean, that's a significant move lower. The indices are certainly not down that much right now. So it's underperforming. And NASDAQ is down the most, pretty much. Well, it's sort of neck and neck right now with the Russell 2000 in terms of percentages down today. But the ARC fund is down even more. So there you go. Where our retail is green. So that gives me the hope. Not that I want to see tech get destroyed by any means, but I'm rooting for the U.S. economy, obviously, and hence I'm rooting for granny retail.
I always love that phrase.
Well, we're actually, speaking of AI, we are working on something at marketgauge that I hope people will really enjoy. But AI, I mean, this is why you can't possibly say anything negative about it. It's just more a matter of the trading aspect, the numbers, the price. But as you said before we started, where isn't AI going? And it's going into animation and film and music and art and biotechnology. And that's where I think right now the opportunities lie in terms of investments. But we'll get into that too. So what else am I hoping for? I'm hoping the dollar doesn't get too strong. I'm hoping the yields don't get too high up. This is what I look for. I look at inflation. I look at my trifecta of inflation, right, which is the gold to silver ratio. So we just saw this huge pop, new all-time highs in silver, where gold just kind of got dragged up. Now we're seeing that unravel a little bit today, but certainly the direction of that ratio is something I'm looking at for an inflation indicator, along with the dollar. Dollar tested 100. Everybody got super bullish. And now it's down, and I think if it breaks down under 98, we got some issues with the dollar. That could be inflationary. I'm watching the grains. I'm watching sugar. I'm watching all these things all the time, waiting for some major sign. And, of course, the energy space. That's a whole other conversation.
Oh, my gosh. There's so much to talk about there. Let's dig in.
I know. But before we started, he said, well, maybe we could talk about an hour. And I'm like, an hour? What do I have to say for an hour?
Mish, I know when you come with the good stuff, and this is that day.
Okay. Well, yeah, we do have a lot to unpack here. I mean, even some of my newer investments I'd love to share, things that I have bought for our fund and, in my own personal trading account.
All right, I'm going to give you some choices here. Where do you want to start? We could talk a little bit about the new investments. We could also talk a little bit about dollar index, which I know you watch closely on that 99 knife edge there. I'm curious what you think about it because it plays into inflation. By the way, the other thing we should probably talk about is where we are right now in terms of inflation. We've been in this data blackout. We were joking a little bit about it. You said in some ways it's actually helpful because you just focus on price.
Yeah. And by the way, let's not forget about our whole crypto conversation that we have to have too. But we'll put that one on the shelf. Yeah. I always have to preface this by saying that I spent many years on the commodities exchange a long time ago, before we had social media, before we had news at our fingertips. You used to I always think of the Addams family, when Gomez would get the tape coming across and he would see how his stocks were doing and he'd see the news. That was kind of like the life that I lived in for a while, where we didn't know. I was trading the metals, I was trading oil, I was trading the softs, but we didn't know anything major until it came through on the broker side. That got communicated to the clerks, that got communicated to the brokers in the pit, right? So it wasn't like what we're seeing now. And that was just fine by me, because you knew from all of the signs of momentum increasing, all of a sudden there'd be a lot more orders in the ring. The guys would be screaming a lot louder. There'd be a much more frenetic activity outside the ring in the booths. You kind of knew something was happening. And that's why I say price. Price tells you what's going on, price and volume and momentum. So that's, to me, the fact that we haven't had to look at any economic statistics now for the last 43 days hasn't bothered me at all, really. And what have we seen anyway? Everything revised. So let's talk about inflation. How many revisions have we seen to the CPI number? And does the CPI number really have an all-inclusive type of situation where it excludes energy and food, two things that, obviously we need more than anything? Is it a good measure for the services, insurance, things like that, basic trends of what's happening in the country in terms of travel and leisure and spending? Yeah, but it doesn't really tell you about inflation, and it certainly doesn't predict what's going to happen in the future.
To what extent is inflation a major story in this economy in terms of the consumer? This is something we mentioned earlier when we were talking about the retail ETF. How much of a factor is that? How does it bleed through, and how do you measure that?
Well, again, I mean, as a commodities trader, you have to look at things individually. So like, for example, I saw on X 2 days ago, oh, lumber's at the lows. We have no inflation and we're going into recession. But then you take a look at the silver chart yesterday, making new all-time highs. Oh, look at silver. It's going ballistic. We're going into inflation. And, again, it's kind of like, what kind of economy are we going to see as we're going into 2026? And we don't really know what's going to happen. At this point, if I had to put a bet, I would say we'll have a nuanced inflation that will continue. The metals are reflecting that. Obviously, the dollar would be a factor to that if that really starts to fall apart. And on top of that, the energy needs that we have, the demand for these data centers to be fueled by so many different sources could be also inflationary. How this all affects the consumers, they're paying skyrocketing utilities prices. And then outside of that, they're paying sky high health insurance prices.
Yeah.
Still going to the supermarket, and some things are cheaper, but some things are really expensive. I mean, I can't believe that a pound of chopped meat that I was paying $4 for last year is now more like $7 for a pound of chopped meat. I think the consumer is if you talk to the everyday person outside, and I'm always listening, to hear what people have to say, you hear two things. The economy's going into the crapper and inflation's going to go out of control. People are nervous about that. So we'll see. We'll see. I'm not really sure yet. I think sugar is my rock bottom third of my trifecta. And sugar right now is holding 17 cents, which is still a lot more than where it was in 2019, by the way, when it was 4 cents a pound.
Wow.
But it's still down a lot from the peak at 28 cents. So if that starts to move up, I find that very inflationary, because it also is a way to look at social unrest. And when inflation starts to go out of control, then we know that social unrest is becoming a thing.
You know what my index is? What I always look at is the delivery food charges. So on like the Grubhubs of the world, there's a lot of labor cost in that, obviously, because it's the people who are buying the food and preparing the food and bringing it to your house. And what's funny about it is they have these like real-time things, which is it's like this, this battle, obviously, between it's almost like a greed and fear battle. It's the battle between people aren't buying, and you've got to cover the cost of your raw materials and your labor. So what they do is they
Right.
do these like flash discounts, and they'll have like it'll be like a 20% off, 30% off. When I see that, it seems like maybe inflation is easing. This is just my back of the envelope thing, but I think it's funny because you can see it in real time, and it's almost like a metaphor for our digital economy. As you see these, you get these discounts, these rebates back, 25% off. That means that they're worried about slump. When you see those disappear, it means they're worried about covering costs. It's my just like silly little way of looking at it, but
Well, that's great. And, on that, let's talk about the fact that we're in, obviously, from a seasonal standpoint, supposed to be a big, strong buying period by the consumer as we get into Black Friday coming up in a couple of weeks.
Mish, can I ask
And
you about that about Black Friday as an indicator? Because as the world has gone digital, I'm wondering to what extent that day is still the bellwether that it used to be in the in the 90s, for example, when it reached its absolute peak.
right, because e-commerce is one factor, but here's the interesting thing. So what we saw in the back to school, I do a radio show here in Santa Fe once a month called Business Bites. It's on KSFRF, a little plug that you can find streaming on the web. But we interview people a lot, me and my co-host. And during the back to school segment, we interviewed a bunch of people, and that was in the summer. And essentially what came out was that people were buying super early,
Mm.
looking for as much discounts as they could get, and that they were really only buying what they needed, right? So in terms of Black Friday, any buying that's going on, people are already buying. They're already buying. They want to see sales. They want to see free shipping. That's another big thing, to your point before. They want to see, if they can really basically scale back on what they're consuming for the holidays. So that is definitely a factor. So I don't think Black Friday is going to be what it used to be in the 90s, but it is interesting because you still do get a sense. And I think e-commerce is even counted in that right now. In terms of the numbers, I'm not 100% sure on that.
Yeah, but what's interesting about e-commerce is that they can sort of shift the window, right? So if you get an earlier discount period, Amazon week, Amazon day, those discounts, then it can actually pull off what the sort of the centralization of that number was. That's really what it was about in the 90s, right? You had all those reporters over in Paramus, New Jersey at Willowbrook Mall or wherever they were talking about where it was on the rack. But it seems like that world has evolved a bit because of e-commerce and because of the prominence of these digital logistics and shipping mechanisms that seem to become so important to the retail space today.
Right. So there we go. We're back to Granny. That's why you have to watch XRT and IYT, by the way, which is the transportation sector. So if there's anything that's making me feel more on the optimistic side than the negative side as far as the market, it's that IYT, which is transportation, has held the 50-day moving average. It's not that far from its all-time highs. It's not there yet, and it's a little bit red as we're talking today, but it's holding. So we've got the consumer hanging on to major support. We've got the transportation or the delivery of all these services and goods showing signs of optimism. And I know, we had some good numbers out of UPS and FedEx. So things are moving. And I think that's what I say. You can almost put blinders on to all of these numbers and opinions and thoughts that come out and just watch how those two sectors do. And of course, if you really want to get a feel for the semiconductor space and for the growth stocks, you have to watch SMH, which is really a good conglomerate of stocks like NVIDIA. And right now, that too is still in a bullish
This is
phase.
Van Eck Semiconductor Index.
Yeah, yeah, exactly, SMH. Not shake my head. So I think right now nothing is scaring me too much, but that doesn't mean that can't flip to the other side of life, right? And so Black Friday probably won't have that much of an impact, really, like you say, as much as it used to. But the whole idea of people going out and spending money will, for sure.
Hey, talking of which, those unknowns that hang out there, I'm curious about your views on tariffs. We talked about this a little bit off camera, which is this idea of this question of when it comes down to a Supreme Court decision, when things are left to the courts to decide. This is a huge component, obviously, of the international trade picture and of the U.S. and global economy as well. I mean, it's a big question. It's going to be decided by 9 justices.
It's so funny because everybody talked about tariffs being inflationary. And I mean, I think to a degree they have been. I know from talking to a lot of businesses that they have eaten the costs trying not to pass it on to consumer because they realize that that could be devastating. I actually think if they turn back the tariffs, that can be more inflationary than anything else for a different reason. Because I think it sends a message that, first of all, the Supreme Court, which is perceived as being more on the conservative side and on the Trump side going against him, which I think would be a little bit of a shock to the whole administration, number one. And number two, what would that say? Does the administration have the control, especially economically, that they had, let's say, in January when the administration started and everybody was really super stoked about what they were going to do for the economy? That in and of itself could really send gold and silver skyrocketing and maybe start a little bit of a domino effect into some of the other hard assets. And that's why a lot of people are saying, buy hard assets. That's where you should be in this market.
Speaking of exactly the point you just made there, gold trading at 4,200 right now. I understand you have a round number bullish price target on gold.
Well, I'm looking at 4,700 to 5,000. Some people would even say that's conservative. Like I said, if there's any sign that the government doesn't exactly have the control that people were hoping that they would have, and obviously the shutdown, now that it's back open, may not necessarily do very much for this particular administration, that could send gold even higher. But I'm really looking at the gold to silver ratio as the most important indicator. And just looking at it historically over this past year, when it skyrocketed in April, when we had the big sell-off in the market to 114, 115, which means gold was trading 114, 115 times the price of silver, you knew silver was undervalued. And as the market started to bottom out a little bit, silver was a great buy right there. It dropped all the way in October down to around 78, 79, which was the 2024 low, by the way. And that's when we saw silver go up to 50 and gold go up to about 4,300. Then as things started to cool down a little bit and people were kind of like, okay, maybe inflation's not such a big concern. Now we're more worried about recession because of the government shutdown. We saw that flip back to 85. And now yesterday it went back down to around 80. So the reason why I'm giving you this sort of recent historical graph for you to visualize is that if it breaks down under 78, 79, that would be very bullish for silver. That would be an inflationary indicator. And that could mean that gold will go up, but silver will go up faster to $75 or even $85 an ounce. And that's kind of what we're watching for. However, the biggest thing that I think people should understand about this market right now, I mean, always, but particularly right now, is risk management. As bullish as I might be in any particular instrument, I always have my protection, in my space. So in other words, I have stops in silver. If I'm making money, I take a profit. I also, if the parabolic move stops going, I start raising my stop to something that would at least guarantee some income from that.
All right, I have to ask you this question. I think I understand the basic point of the gold-silver ratio trade insofar as it becomes a mean reversion trade as that ratio moves in one direction or the other. But let me ask you this. You mentioned that it might be an inflationary indicator. Talk a little bit about how and why you see that being the case.
Well, first of all, if we go back to 1979, when talk about that gold to silver ratio, believe it or not, when the metals went crazy, that ratio went down into the mid-20s. And so silver was at $50 an ounce, kind of where it's at right now, a little bit higher. Think about it, right? All these years later, gold was at 850 was where it peaked out, and now gold is at 4,200. So you can see that back then, silver could really outperform, and that was very high inflation, as we know, right? Interest rates had to be forced up by Volcker by 1982. If we look at it right now, things are much different. Things are much more. First of all, the cost of living is far more expensive. Our debt is much higher. Our dollar is more vulnerable. Whether people believe in BRICS or not, there's still a buzz about all of that in the background constantly. I hear about it. All these things. And on top of that, silver in and of itself, industrial metal, just declared a critical mineral by the United States, in short supply. We know central banks were buying a lot of gold. Now they're starting to buy silver. So once you have that situation where these real world assets, these hard assets become a supply and demand issue, where the supply is way under the demand for it, that's inflation. And that's why that's number one of my inflation trifecta. Mm. So you asked me about the dollar. Right now, that dollar, if it goes under 98, I think that would be inflationary. So the last part would be what happens with food prices. And we see live cattle and meat very expensive, but we've seen grains relatively cheap. And now if that starts to move up, that's full on inflation. Mm.
Mish, I feel like I'm addicted to anecdotes today, but I want to tell this story because you mentioned that 78, 79 time period. My favorite old school New York bartender told me a couple of years ago that when he first moved to New York around that time period after the bicentennial, 78, 79, like that he was able to cover his New York City rent with one good Saturday night, meaning tips from a good Saturday night. He was done for the month if he had a good one. Nobody's bartending right now making whatever it is to get a one-bedroom apartment in New York City, $4,000. Nobody's anywhere close to that place.
Right. That's a great inflation. I mean, right there alone, everything is so much more expensive. We're in a completely different world, no doubt. And, we still have a backdrop of geopolitical situations as well. I mean, we've kind of been talking about Russia a little bit as far as the sanctions, but Russia's been kind of a bear right now. I was reading some stories about it this morning. They're aggressive and their economy is hurting. So that could actually mean more aggression coming. So, you can't forget about what's happening in the rest of the world and the connection. And even the whole China thing, even though we made nice with China, a lot of what happened with China after months and months and months of threats of these huge tariffs is really back to where we were with China before the tariffs even started. So not much really has happened there. So I think, we're back to sort of a neutral place with China. Well, anything could happen there as well. So, it's fascinating. Everything is so fascinating. I mean, if you are like to be a student of all of the factors that are in place right now that could keep this rally going, keep the economy great, or stop this rally cold and really bring the economy down into the skids, we are really almost at that precipice right now. I like to be optimistic. I do have a little bit of a rose-colored glasses viewpoint of things. And I also think we're seeing evolution happen right before our very eyes. And I think that's actually a positive thing.
What's that evolution? How do you see it?
Well, the AI, I think AI is changing everything. I mean, people are so worried about the labor market. But at the same time, I'm not so as concerned because a lot of the younger generation, we were in New York for a few days, and I love to talk to people under 35 because I want to hear what they're doing. And New York was thriving. I mean, thriving. Did you have homeless people, in the doorways of major department stores? Yes. But were the kids out spending money? Spending a lot of money? Were they out in restaurants? Were they packed? Were they in, throngs of kids together? Very integrated, by the way, considering how I grew up, was wonderful to see. So I'm like, what's going on? Where are you guys getting money from right now? And, they're all investing. And we could talk about Bitcoin, obviously, is a big part of the investment, but they've been investing. They've been creating at home their own AI to do everything for them. They want to do good in the world, and they have a big YOLO feeling. And there's a lot of people working in tech and AI, the younger generations that are getting paid very well. So that tells me that it's not so much about going to an office, and it's not going to be so much about, these big labor numbers. It might hurt, and you wonder what's going to happen to these people. Maybe there'll be some kind of a universal income. I'm not sure. I know there's been intimations about trying to help from the government in terms of some kind of a universal income, and I'm not saying it's going to happen, but I do feel like this younger generation is divided between, yes, worried about things like some kind of environmental crisis, but at the same time feel like they're ground zero of this diversification and move into AI that's only going to make everybody's lives more prosperous and better.
Yeah, I'm a big fan of AI. I've been engaging with it absolutely compulsively. I find that it makes me enormously more efficient. But I guess the flip side of that, and this is probably my concern around the AI trade, is that by making me more efficient at the things that I do, you have people who are established in the workplace who are in mid-career who are able to do things easier, simpler, faster. I need just less and less support. I mean, we remember, Mish, when you and I first got into Wall Street, everybody had something called a secretary. If you were a mid-level person on Wall Street, you had a secretary. Then they called them executive assistants. But the reality was you needed someone to do all your stuff for you. You needed someone to manage your calendar. You needed someone to manage your physical inbox, right? There are all these things that you needed someone to manage. AI is making things so much incredibly more efficient that we have the ability to do things for ourselves. And I think where that bites most is new entrants into the labor market. You just don't need as much support for junior level tasks, for people who don't know the industry, for people who don't know the business. And again, anecdotally, I do hear this from people. And I always ask people, by the way, you want to hear a great question to ask a young person? When we meet these bright, shiny young people who are doing really well because we're out and about on the Upper East Side or wherever we may be at the time, ask them this: how's it going for your friends? What's it like for your friends from high school? And the people that I interact with, I'm very fortunate, are very successful and they're doing very well. But when I ask them that question, how are your friends from high school doing? Did they find jobs? Well, they're still looking. It's a struggle. I hear that more and more, and it really just concerns the hell out of me in terms of labor markets, particularly for new entrants into labor markets, the younger end of the distribution curve, the younger college graduates. Gosh, I do have those concerns.
And they're legitimate concerns, and that's part of the evolution, right? So either one of two things are going to happen. We're going to stay in this sort of K-shaped recovery where you're going to continue to see the divide between the haves and the have-nots get wider. Or at some point, these people that are trying to figure out what they're going to do with their lives will have to invent, right? Necessity, the mother of invention, ways for them to create income. And I'm not 100% sure what that looks like. There are certain things AI may not be able to do, like, fix your pipes if something goes leaky in your home, do electrical work. I mean, of course, you can look at anything on YouTube to figure out how to do something, but that doesn't mean everybody's capable of doing that. And maybe the work will come from more of a communal space. I'm not sure. I don't have a crystal ball, but I worry near term. And Darwinism is a thing, right? The survival of the fittest. There will be people who will suffer, but that's evolution. And so does that have anything to do with the stock market? Not really. And so we know the market and the economy are two different things. But nonetheless, it is fascinating to watch.
Well, if we all want to survive, I would recommend keeping me away from doing any plumbing work, even with 1,000 YouTube videos of experience under my belt. But let me ask you this. I want to talk about something, the phrase that you've coined here and you've talked about here on Real Vision a great deal over the years, which is this idea of the emerging vanity trade. And one of the things that I find interesting about this is a thesis tied to specific names, which is one of the things that you do so well, Mish, when you come on the show. Talk a little bit about the vanity trade and the names tied to it in your view.
Okay, well, and I have to say, Ash, since we have so much time and we can really have great discussion like we have, one of the things before I even want to get started that still surprised me is the lack of compassion people have for those that have suffered from obesity their entire life. Why don't they just stop eating? And I know that it's not that simple. It's an incredibly complicated thing. And I always like to tell this story. I personally have never had to worry about that, but I've had many friends through the years who have really dealt with yo-yo dieting and can never seem to keep weight off, and how it impacts their life on so many levels. And I'm giving you this as the backdrop. And with the now idea that they can take, whether it's Zepbound or Wegovy or Ozempic or Mounjaro or any of the drugs that are coming out and eventually more affordable, and also in pill form. And they're even talking about microdosing, and then the health benefits to that. This is a huge, talk about evolution. This is a huge shift in what happens to people. And I'm talking about a huge number of people when all of a sudden they don't have that concern anymore about being obese or what they put in their mouth or, how they look and how they feel about themselves or the health problems that come with. So that's the backdrop. So now all of a sudden we're in a world where people have all these choices, and it's only going to get better and better and better. And of course, there's competition between the different companies and how it's going to be delivered. But the point is that they're looking at 50 to 100 million by 2030 that could be on some kind of diet drug. I think that's conservative because they're basing that on obesity numbers at 37%. There are going to be people who are just 50 pounds overweight, hardly considered obese, that also are going to go on the diet drug. So we could go well north of 100 million people that are now looking different, feeling different. So what does that mean? This is logic, right? What does that mean? And I know you and I talked about this the last time. You said you had a friend who was a male friend. Did you ever ask him, by the way, how his shopping habits might change?
I mean, I feel like of my male friends, the exceptions are those who are not on it. I'm the exception at this point. I mean, and it's really funny because men will tell you within 5 minutes of meeting them, Bob, you look great. Yeah, I've been doing Zepbound. I mean, they just tell you right off the bat. It's super funny. By the way, I should say all the obvious here, not medical advice, not investing advice. All investing involves risk. But these big picture themes are so interesting to me. I mean, the number I don't know as much about my female friends because they don't tell me as readily, but my guy friends, I mean, they'll walk into a group of 7 people and happily tell you what they're doing. And it is really interesting to see the tremendous lifestyle change. But by the way, I mean, it does seem like it would drive lifestyle changes that would drive consumption, meaning, well, I mean, the most obvious thing, right? None of your pants fit anymore. If you lose 40 pounds, you got to go out and buy it. But I imagine you probably want to do things if you haven't been able to do the things that you love to do. I don't know, whether it's skiing or scuba diving or whatever it might be, you probably want to get out there and do it. You probably want to go out there and engage in those activities. The other really fascinating thing about this, I mean, I just have a Wall Street Journal, New York Times view of this. Obviously, I'm not a deep thinker on the subject. But the really fascinating things about these GLP-1 drugs and GIP drugs, the drugs that are in these categories of new weight loss drugs, is that there was an article I read in the New York Times, and it was about 1,000 words, essentially saying that the benefits of these drugs at controlling, they believe the mechanism is inflammation. And when you read about the inflammation being at the root of so many diseases, inflammation, I'm not just talking about your elbow swelling when you bang it, but at the cellular level for things like type 2 diabetes, cancer, heart disease, stroke risk, all of these things that are tied to this article essentially made the argument that the degree of reduction that they've seen in the clinical trials of some of these diseases, the big killers in America, they're reduced at levels that cannot be explained by weight loss alone. In other words, everybody knows that if you lose weight, your risk of having a heart attack goes down if you're overweight. However, what these studies seem to indicate is that your risk of dying of heart disease drops even greater than the amount of weight you lose would suggest it does. I mean, that's a huge implication for the way that, go ahead, please.
Well, you're talking about a revolution, essentially. I mean, people have talked about the AI revolution. And I do feel good because I have been pretty much a lone voice, other than all these articles that you see, about this revolution, the thin economy, the new consumer. And what does that mean for evolution? Now, whether or not these people find jobs, that's another story. But nonetheless, at least they'll feel good. So what does that mean? Right. So where are they going to go? So these are the stocks that I have been investing in and watching outside of Eli Lilly, by the way, which, my goodness, I mean, over $1,000 for that stock. And yet it gets hardly any press because all people want to talk about is, is NVIDIA trading over 200? Or is Tesla going to go to 1,000 or what have you? Eli Lilly, I mean, that's amazing. And some of the others have lagged behind it because obviously Eli Lilly is the king right now. It's the NVIDIA of the diet drug companies. But you got to watch Novo Nordisk and you've got to watch Pfizer and you've got to watch Viking Therapeutics. And then the deals that they're making. Yesterday, there was an announcement with Novo Nordisk and Weight Watchers that they're going to offer. And you kind of think, why would somebody go to Weight Watchers if all of a sudden they can lose weight? Well, that's really where you need nutritional advice more than ever. They just figure that people are going to be able to continue to eat the way they were. No, that's not what happens. You actually lose your desire for a lot of the junk food, and drinking. Alcohol stocks have gone down. Fast food stocks have gone down. Look what's happened to, stocks like Chipotle, which is partly that, partly also because of kids not being able to afford to get their Chipotle lunch every day like they used to. But going back, they're going to go shopping. You mentioned clothes and losing weight. So are they going to buy clothes from a department store that they may have to return if they lose more weight or gain some weight? Or are they going to go to places that are more temporary type of clothes where you can get things on delivery and then send them back, like a Stitch Fix, like a Rent a Runway, which had, by the way, this crazy move up over the last couple of days. You want to take a look at beyond fashion. AbbVie's been doing very well. That's where people might need to have their skin tighten up. That's the Botox company. You want to look at things like supplements, places that sell something like New Skin and some of those type of companies. Herbalife, there's a name from the dead. And then you want to look what's going to happen there. Are they going to go traveling more? So you may want to look at that, but also Planet Fitness has had a really nice move up today, up over 5% as I'm talking to you. You want to look at Ulta Beauty. That's doing well. Elf crashed, but I feel like that might have been overdone. There's so many, just start thinking about, like, I have this new life, dating, all these things, these meetups that could happen as a result. I mean, Michael Burry, although I heard he's getting out of the hedge fund business, bought Lululemon. Now, that may not be the place I would go because I don't know if these people are going to buy $100 yoga pants. But, you could look at Urban Outfitters and some of the other places and really start thinking about, okay, not only am I thin, but I may be able to stay thin for the rest of my life. And thin, by the way, being a relative term. You mentioned about sports. It's funny because there's one commercial I've seen on TV where this guy lost this weight with his kid and he goes zip lining. Zip lining wasn't an option for him at obesity levels. Now, all of a sudden, he's zip lining. So, yeah, I think that I'm very, very excited about this, not just from investment, but also really for these people who have suffered. I cried my eyes out through the one Big Loser episode I ever watched in my life, The Biggest Loser. I don't know if you ever saw that show. But I mean, this is really where the compassion for me began, was when I saw this show. And I realized that we take a lot for granted in terms of nutritional education and, and socialization and how people relate to each other, trauma and everything else, and all the reasons why people become obese.
Well, Mish, credit where credit is due. I have to say you were early talking about a lot of these things years ago in the early days when people were talking about these drugs. Obviously, they were lifesavers for people who, for example, had very high BMIs, over 40. But you were very early to this idea of thinking about the social, cultural implications of these medications more broadly in terms of the way that those effects were knocked-on effects and bled through into broader cultural and consumption trends. You were very, very early to that. And now, by the way, I should say, lots of people are talking about it, but they weren't talking about it when you were years ago.
Thank you for that, Ash. I appreciate that. But it doesn't really mean very much because we're really all about making money, right? So it's where are you going to put your money right now? And I don't even think we've seen the beginning of the movement yet into where the consumer is going to go. So I would keep my eyes on that. It's a big theme for 2026. That and also biotechnology is another big hot topic for me for 2026, where AI is coming into that space. A lot of those stocks are still undervalued, companies that are involved with AI for not only just doing research, but even, patient information, data, as you said, you don't need the receptionist in the doctor's office anymore because everything is all done for you through AI. I think you have to look there. And then you also have to look at the changing health habits of people and where is that going to go? And rising health insurance costs, because that's a big factor. And if that doesn't come down, I think you're going to start to see more and more people using services like Teladoc, or Amazon has a doctor online service that you can use now. So these are the things that I'm looking out for 2026 in particular.
Oh my gosh, time is flying by here. I realize we have about 10 minutes left, so I want to just touch on some other points, which is crypto, one of the other topics that you wanted to touch on this show.
Well, it's funny because I was on a round table yesterday for the Money Show, and we were talking about it, and people asked, does anybody here know anything about Bitcoin? Which I thought was a funny question. And so I said, well, I know a couple of things. I'm not a crypto expert, but I do know this, that, there's the discussion of whether or not Bitcoin is the place to be investing right now, or is it more in the blockchain and the infrastructure and some of the altcoins that I've been watching a lot, like Chainlink, like XRP, like Ethereum, like Solana. And I was reading this morning because just saw it on the charts, Zcash, which is more like Bitcoin. And then all of a sudden, Warren Buffett just came out with his final speech, really. I mean, the man is 95 years old, but he's still so smart. And he said, his thoughts on the Bitcoin space was, as a value investor who's always been interested in buying stocks that create income, hence dividend investing, he said Bitcoin doesn't give you any real income. So he thought that was risky. However, he did feel that the blockchain and where blockchain is going in terms of the financial space with stable coins and tokenization was a real thing. And he was very excited about that in the future. And that kind of really mirrored in a much better way than I said it, what I feel about the crypto industry. It's kind of like in some ways, Bitcoin got all the thunder, but really, I think that there's going to be a lot of opportunity in the infrastructure part of it. Even if you just look at blockchain itself, BLOK, I'm still liking Bitcoin. I think it's held up pretty well. People expected it to really crash under 100, and it really hasn't. But I'm more invested right now. I got back into XRP. I bought some Chainlink. I haven't really stepped into Ethereum yet, but I might, or I might do it through the Tom Lee ETF. I'm not sure yet. Yeah, all of that. And then I was reading about, Circle today, the on-chain trading stable coins. They're doing these currency pairs. And I saw that Kathy Wood made a huge investment in Circle yesterday. It's trading at around 86, 87. But what's that going to do? That's going to process 1 trillion in payment volume by 2030. So Circle is something to keep an eye on. These are the things I'm watching. I'm not heavily invested in anything right now. I'm very light, like I said, because we really are at this sort of interesting precipice, watching the consumer and watching the AI space roll over a little bit.
But it sounds like you're certainly watching the space.
Oh my goodness. I love trading anything crypto. It's so highly technical. I mean, it's amazing how technical it is. It reminds me of the old days in commodities when there was so much liquidity. You can watch the volume patterns when you start to see an accumulation day in volume, which means that if you look at volumes through red and green bars, if the green bar exceeds the last couple of days of red bars, then cash flow is coming in. And that's a really good sign to get into any particular coin. It doesn't even really matter what it is. I stay away from the coins I know nothing about. I like to stick to those top that I just mentioned to you. But there's money there. But you got to think of it more actively right now. It's hard to make a real investment at this point, but that time is coming.
Mish, always a pleasure when you join us here on Real Vision. Gosh, we've covered a tremendous amount of ground in this conversation, but I want to give you the opportunity now to do final thoughts, key takeaways from this very broad and varied conversation.
People thought that opening up the government was going to be really great for the stock market, and that was already baked in over the last couple of days, and actually we're seeing a little bit of a rollover. But I also think that if we see any kind of correction here, it's probably going to be a buy opportunity. So that's kind of what I'm looking for. So just continue to watch the consumer, XRT, IYT, watch ARK, because that's a really good sign for technology. Obviously, SMH would be another. And on this dip, I may not necessarily run into the classic AI stocks that we saw. I'm looking at Microsoft. I think that's outperforming right now. IBM obviously has done very well. Look out into where else AI is having an impact. Look at art, look at music, look at science and medicine. And then, of course, watch the consumer in terms of this whole diet drug revolution. And And I think that's kind of, right here, my best advice for 2025. It's been an interesting year and really understand risk management. That would be the last thing I say. I can't stress it enough. Everything is not a buy the dip or keep buying when it goes up. You really have to understand money management.
I know we've had you with us for 50 minutes here, but I have to ask you this because one of the things that I always like to focus on is the flip side, which is risk. Talk a little bit about your view of risk management before we wrap here.
So basically, I never make a trade without putting a stop in at the exact time that I make the trade. So I always go into every trade thinking about what I'm going to lose potentially. And can I live with that loss? And that has really, people love to look at, well, if I put $1,000 in the Dow, like 50 years ago and I held it to this point, I'd be a multimillionaire. That's so unrealistic. It's actually one of the things that drive me crazy the most on X when, well, if you bought NVIDIA here and you still would, people don't really do that very often. I've not met very many people who have sat in an index fund for 40 years through thick and thin, but that's another story. So essentially, if you're more like me, an active investor, always know what you're going to lose going in. Can you adjust the stop a little bit? Generally, I will adjust the stop if something is gapping lower using the first 30 minutes of the day. I'll look at the first 30-minute range of any particular instrument if it's at my stop level, and I may adjust it to under that 30-minute opening range low, because generally most stocks make their range within the first 30 minutes. So if it breaks out above that range or breaks down, that can be significant. And then finally, when you have that risk, once you start making money, and you have to decide where you want to get out. And what I do is a multiple of that risk. So if I risk $2, I'm not going to start taking profits until I make at least $4, double the risk, but I raise my stop to no loss. And then if I get something really big, like, my gold this year, I had so much money in the gold, I just kept raising and trailing up the stop. So this way, it's okay if you get out of a position, because everything cycles. That's what, if there's one lesson that young people who started trading in 2020 should learn by now, is everything, no matter what it is, cycles. And you always get another opportunity if you're patient. And then you start the process all over again. Get in, know your risk, you're making money, raise your stop, take a little profit, and so on and so forth.
I'm so glad I asked, Mish. Always great to have you on the show. Always great to get your wisdom with us today. Mish Schneider, thanks for watching. Thanks for joining us. Really appreciate it.
Thank you so much, Ash. It was so great to see you and have this great conversation. Thank you, everybody who's been listening.
Have a great day, everybody.